Hi, well, this is a super quick video, just to update on the FOMC meeting that's coming up in a few hours' time. It's 4:30 my time now. So in about 3.5 hours' time, I think it's 12 noon New York, which is, it's actually 2 o'clock somewhere around, can't remember now. There have been some time zone shifts. But anyway, it's 8 o'clock my time, so it's 3.5 hours from now. So 8 o'clock, I think it's 2 p.m. New York. So FOMC is meeting, or they have met, or they've already decided in any case what the interest rate hike is going to be. Everyone thinks it's going to be 50 basis points. And that's kind of priced into the market already. So what you've got in front of you here is the euro. And just want to say a couple of things. This is a very, very quick update because I'm just watching my charts looking for opportunities. You can see I'm already in the euro. I'm 11 or 12 pips up on this trade. I bought right at the bottom here, and that's after a very long period of a very long move down, all the way from 1.24 roughly down to 1.04. So it's about 2,000 pips actually, which is ridiculous. It's incredible, and the dollar is incredibly overbought. Now, the fact that the dollar is overbought doesn't mean it's going to fall back down again. It doesn't mean the other currencies are going to recover. The market can actually stay irrational for longer, much, much longer, and you can remain solvent. So overbought and oversold is a term which actually may be true, but it doesn't dictate or predict what the market's going to do. But having said all of that, we've got the interest rate announcements coming up shortly, in a couple of hours' time. And let's look at three scenarios. First scenario, the Fed hikes rates by 50 basis points, 0.5%. That's already been built into the market. The market's already anticipating that. It's been rumored, it's been talked about, it's been thought about, discussed in the corridors of power and the corridors of Wall Street, and that's what everyone thinks is going to happen. So if that does happen, we're going to get dollar weakness, I imagine, because it's already anticipated, it's already built in, it's already baked in, priced in to the market as it stands at the moment. So what that means is we're probably going to get a drop off in the dollar and a rally in the other currencies. And when I say other currencies, I mean the majors, which I trade mainly, like the euro, the pound, the Australian dollar, the Swiss franc, Japanese yen. All of those currencies are probably going to rally, which means that there's a good chance to buy now. It doesn't mean that it's going to be without danger, because if the Fed increases rates by more than 0.5%, the dollar will definitely rally, and these currencies will continue on their downward slide. There's no doubt about that. On the other hand, if the Fed drops interest rates by less than 0.5%, less than 50 basis points, let's say 25, or even none, which is incredibly unlikely, but possible, anything's possible. If they do that, then the dollar will slide and these currencies will rally. So in two of the three scenarios, 25 basis points or 50 basis points, the dollar will probably slide and these currencies will rally. In the third scenario, if the Fed increases rates by more than 0.5%, let's say 0.75 or even 1%, then the dollar will rally and these currencies will continue on their way down. So 2 out of 3, that's 66%. It's pretty good odds for a long trade on these other pairs. And as you can see, I'm long the euro right now, about 15 pips up. And I anticipate that if we do get a rally on the euro, I'm just using this as an example, and you can look at the charts on the other currencies as well. If we do get a rally on the euro, we should move up to at least this next point of resistance, which was support. Let's just put a horizontal line there so we can see it quite easily. And you can see it was support over here. We don't want that line. I'm using my TradingView charts right now, and they can be a little fiddly, but my OANA charts have been a bit on the blink today. I don't know why. So previous support, then it became resistance, and now we've dropped way below it. And if we do get a pullback in the euro, remember, we've got problems in the Ukraine, we've got problems in Europe, there are all sorts of other things going on, commodity prices, there are problems in the US with interest rates, particularly that's what we're talking about today, and also inflation. So it's all a bit of a mess. But This will just be basically a pullback on the euro for the moment, unless we get an overall major trend direction change, which who knows at this stage. But the pullback will be probably up to around about here, which is about let's say 1.09. We're about 1.0550 right now. So that's 300 or 400 pips from where we are now up to there. This is a day chart, remember. It doesn't look like it's very far, but this is a day chart, so it is quite a long way up. But even halfway up there would be great, 100 or 200 pips. So that's my bet for today. So good luck to you all. If you're going to be trading, it's best to get into your trades right now. You're going to need a big stop loss. That's very important to understand. I've got a 100 pip stop loss on this trade. The reason is because at the moment that news comes out, the market will be thrashing around all over the show, and we're going to get big spikes, big moves up and down, some instability, uncertainty, chaos as the market digests the news and weighs all of that up. The interest rate, whatever it is, 0.25, 0.5, 0.75, God forbid 0.1, 1%. Heaven help all those Americans who are struggling with inflation and gas prices and food prices, and tax increases proposed as well. And if you get an interest rate hike of 0.75 or 1%, that would be absolutely disastrous for a lot of people. I hope it doesn't happen. But they'll be weighing up all of that stuff against Ukraine and whatever's going on in Europe and commodity price. So everything's a real mess at the moment. So traders, the big money is going to be doing a lot of thrashing around the moment these numbers come out, and there's going to be chaos in the market for an hour or two. So if you're going to take a position, do it now before all of that starts. Take a small position, use a big stop loss, and hope for the best. You have about a 66% chance of winning a long euro, a long Aussie, a long pound, a long Swiss franc position against the dollar, but you've still got a 33% chance of losing this trade. Who knows? Their odds are better than even, but still not great. Okay, good luck, and I'll speak to you once the dust has settled, I guess.